Hello and welcome back. This is Brandon Wendell, Chartered Market Technician. I'm going to do some analysis on the equity index futures. And starting off, we're taking a look at a comparison chart that starts from October 13th, which was when the big rally really began. As you can see from our comparison chart, the Nasdaq is clearly the front runner here, taking us much higher, but it's getting some weight pulled on it. You notice that the S&P is in second place there, but it's starting to go back down quite a bit, and we're really seeing a draw with the Dow and the Russell pulling down sharply on that tech-heavy index. So Apple and a few other names are really driving Nasdaq higher in contrast to pretty much the other markets. So we'll see if that's going to be able to continue or not. Going a little bit further here on the analysis, I decided to go to the November 10th, the most recent rally. And again, you really see a divergence here with the Nasdaq taking off and the Russell and Dow trying to pull everything downwards. So we'll see who's going to win out this week and which way we might end up going. So I started off looking at the S&P. That's usually my go-to and my favorite one to trade. Excuse me, although it may not be the leader as we saw. And looking at the S&P right now, there is a negative divergence, possibly. We haven't confirmed it yet, and I say that because you got to have a close after, well, this candle obviously closed on Friday, but we got to have a lower high and lower low following up that candle for the actual divergence. But the momentum, as you can see, is diverging. It's just not a divergence yet confirmed, but definitely a lot of weakness coming into price. So we'll see if that continues. Looking at the smaller time frame here, the 4-hour chart, you've got a nice uptrend that's been formed, and that bullish trend is still continuing. So even though we saw a little bit of weakness, like I said, the divergence has not confirmed yet, and we have underlying strength going on here. And with the extension of the last impulse right here, we had our impulse up, pull back, and you can see we actually hit the 61.8% projection of the previous impulse. If we do bounce off the trend line once again, then your next target is going to be the 100% duplication of the preceding impulse. We are impulsing much weaker than we did before. The angle of attack here is very steep in comparison to what we're experiencing now, but we're still seeing bullishness. The RSI can't seem to get below 40, but there is a divergence right here where you can see we made higher highs in price, lower highs on the indicator. So we're definitely getting weak. Probably want to test that trend line before we get another bounce. Going down to the 60-minute time frame, there's a lot more weakness being shown here, which is why I said we're probably going to pull back to that 4-hour trend line before we can bounce, because you can see we rallied up and couldn't even get the RSI back into bullish territory. So prior to that, we were kind of weak to the upside because we were still dipping below 40 and making lower lows with higher highs. So starting off on Sunday night, going into Monday, as I said, we got some weakness coming in on the 15-minute chart. I don't really have much because prices are going kind of sideways and choppy. We do have overhead supply at 47.16 to contend with. Didn't really have any great demand down below, so there's not a trade opportunity presenting itself as of yet. But once more, I do feel like we're going to pull back towards that 4-hour demand zone first before we get any kind of significant bounce, or the 4-hour trend line that was, not the demand zone. We'll watch that trend line. Moving on to the Dow, this is one of the weaker indexes you can see from last week. We completely started collapsing, and we actually are able to go very deep into the zone right now, or have been. We're beyond the 38.2% retracement, which suggests we should go down at least to the 50%, if not to the next level of demand here on the Dow. We have not dipped into bearish territory on the RSI, so still some underlying strength, but we're pointing down, seeing a lot of momentum building up. So I don't see this demand zone holding. I think we'll at least go down to 35,318, if not the 35,227 pretty soon this week. Looking at the 4-hour chart, we see a bigger bearish picture where we had lower highs and lower lows, and there's not really any quality demand until you get all the way down to this 34,939 area. And you can see with the RSI, we're clearly in bearish territory, failing to make highs above 60 on the RSI. Dropping down to the 60-minute chart, we started pausing a little bit with possible divergence. I didn't mark it off, but you see the lower low on price. Failed to do that on the indicator, so we're bouncing a little, but this is just going to be a small bounce. And if we can get up to 35,918, there's that shorting opportunity for almost 1,000 points, maybe even a little more than 1,000 down at that 34.7 area that I was looking at on the previous chart. So if we're trying to fine tune this on a 15-minute, if we don't rally all the way up to 926, there is an area of supply here at 640 that will come into first. Could get a little push downwards off of that, down, and we have a little bouncing area here, 35,469. pretty thick. Two demand zones right on top of each other. So it might give us a little bounce again before we continue lower. Moving on to the leader, the Nasdaq. This was the one that's been driving to the upside. We have weakness. This is unsustainable. We rallied up very, very sharply, pretty much same angle that we had before, but we don't have the same momentum we had before. And that's a problem. When you have less momentum on a rally than you had before, that's not sustainable. So, I don't know if it's going to turn around because we did actually hit a Fibonacci extension. That projection of the preceding impulse of 61.8% has been hit. On Friday, we retreated from that area just slightly, and we'll have to see if there's more weakness on the smaller time frame to see if this is pulling back. This is not a great demand zone, by the way, the 16,212, because you have a very wide basing here and a kind of a weak rally. We only went about 1.5 times the height of the zone as we left. So unless this keeps going for a little while, price could retrace down to the 15,717. And obviously, if that happens, this has been the strongest index. That's going to free up the other indices to drop very quickly. So if we do pull back, I did not have any good demand zones here on the 4-hour chart. So I was looking at that last impulse through the Fibonacci's on there and just wait to see if we can bounce at any of these retracement points to continue to move higher. So it may not happen. We may go all the way through down to the daily or even the 4-hour demand zones I was just mentioning. Going down to the 60-minute time frame, we do actually have a little bit of demand. This one has already been tested, but barely. So there's likely to be a lot of leftover buy orders at the 16,508 to 16,490 area. So if we do start pulling back, that'll be the very first test. What'll be interesting to see is if we bounce at that area, this would almost form, we got left shoulder, head, and a bounce there would provide us the right shoulder for a nice reversal pattern that should take us down to at least the 38.2% retracement at 16,376. Keep transposing numbers there. 16,376 or down to the 302 level as well. That's the 16,302. So kind of interesting there. I'll be watching to see if we actually get the bounce on that hourly time frame demand zone, give us a little head and shoulders action there down to the next Fibonacci retracement area. Still very bullish on this trend, but we are seeing weakness. As we made new highs in price, we didn't on the indicator. That's a lack of momentum on the new high, not sustainable. Going down to the 15-minute chart, really have nothing here. You just see consolidation going on right now, and the RSI is going sideways with it. The 60-minute demand zone is really what I'm watching for, and you can kind of see that head and shoulders, the left shoulder, head, and we're getting ready to possibly come down for that right shoulder. So if that does happen, where we pull back, we get those pullbacks on the other markets, we get a little bit of a bounce before we go ahead and then turn into a head and shoulder formation that should give us that move downwards. Honestly, you probably don't want to short the Nasdaq because it was so strong, although it could fall pretty quickly, try to catch up. You typically want to short the weakest market, which we know is the Russell. So looking at the Russell 2000, you saw that we had a lot of weakness. Last week's video I was talking about, we had a lot of weakness. We were likely to move down to the next fib levels. We had already retraced the 38.2, so we actually went beyond the 50% down to 61.8. Pretty deep retracement already. The next level of demand, looks like we might have something right here. Right at that 78.6 levels, we got this drop base rally. So we may be heading down to that level. Remember, this is the weakest market, so we've got some clear sailing down to 2,300. If the Nasdaq does do that head and shoulders, the Russell will be free to fall. Looking at the smaller time frame here, the 4-hour, trying to fine tune what's going on. We've been moving down quite a bit. Looks like we're going to get a little bounce here because you see the positive divergence. Prices are making new lows, but the indicator really isn't. So we might get a little bounce, but we have plenty of supply overhead. 2397, basically 2400. It could take us down to that 2300 area that's being seen, not just on the daily chart, but here on the 4-hour as well. Right now on the 60-minute chart, we can fine tune this in case we don't get all the way up to 2400. Even though this was kind of a retest of a previous area, this still has a lot of selling pressure built up at 2372, 2377, looking for a possible short there and driving us down, like I said, to the 2309 area. So looking for a nice 70-point move. No, sorry, 60-point move to the downside potentially. All the way down to 15 really didn't change the picture. The only quality, really good supply zone I still see is at 2372, and I'm going to be keeping an eye out for that. Remember, the Russell is the leader to the downside. That's the one you would typically want to play southbound or shorting. And the Nasdaq is the strongest index. That's the one you want to play on the long side. So that's kind of what I'm seeing right now for this week on the equity index futures. Until next time, trade safe, trade well, and everybody take care.